Sarah from Experience Wealth, and I am the Associate Advisor and also in-house lending specialist. We specialise in generally first home buyers and people purchasing their maybe first investment property, so it's usually a pretty new experience for them, and we try and give value by making that a very non-stressful time for them. The one top tip I would have is the way that the lender's mortgage insurance works is that the bank assesses the loan in one set of criteria, and then the lender's mortgage insurance has their own set of criteria. And what I've found is lender's mortgage insurers are quite strict on employment history and job security. So if you're planning on looking at buying a house in the next 12 months, I would suggest staying in the same job now, or at least getting a job in a similar industry, because they'll look favourably on that. If you've been chopping and changing jobs, sometimes they won't lend it to you because they might see it as a bit of a risk. Yeah, definitely. So the bank will look at consumer debt in terms of how much they'll lend you. So it is a very key element. So if you've got personal loans, credit card debts, car loans, the best strategy I can give you is try to reduce those as much as possible before going for a loan. The other thing I'd also say was that credit cards, so even if you've got a zero balance on your credit card, they actually assess it at the limit. So say you've got a 20 grand credit card limit, but you'd never actually used the 20 grand, even if that's at a zero balance, they're going to assess it as it would be 20 grand. So definitely try and reduce that if you don't need it. Yes, well in some cases it will be, but in some cases it won't be. So generally banks, if you are borrowing more than 90%, they'll actually require 5% of genuine savings. Now, before you freak out, saving 5% might be hard when you're paying rent, but there's actually lenders out there who will look at your rental history and take that into consideration for your 5% deposit. So there are a couple of lenders who do that, so if you want to find out who, please let us know and we'll help you. Yeah, so things have definitely changed. It is a lot harder to get a loan now, just with regulatory changes, banks wanting to know more about your living expenses and difference in repayment types and things like that. So the benefit of having a financial coaching house that knows your situation inside and out is that we can work together, me as the lending specialist and them as the money coach, to make sure we put you in a loan that you not only can afford but can also pay off in the long term.